you don't have any money at that point, but then as you progress along, then you get to the point where, okay, now you've got a professional job or a job that offers a 401k. All of a sudden kids come along, maybe you do a 529, and the older you get, the more money you're making, and then you go past the point where you've maxed out your 401k, right? Because most of them just match up to 4 or 6% or something like that.
Yep.
Well, now you get past that point and you're like, okay, I have extra money. I don't want to go out and blow it. So now I want to educate myself on how to invest that money.
All right, what's up? Welcome back to How to Invest in Commercial Real Estate. And today we're talking about the different levels of investors. So there's beginning investor, there's all sorts of investments for where you're at in life. Obviously, we're talking about commercial real estate investments today. And there's different levels of investors, right? We see the people signing up to the list. We see the people who end up investing in deals, and it's funny because they all have different types of questions, right? Based on how high you get up in the levels. But anyway, today is all about the 7 levels of investing. So let's dive in and see what we can drum up.
We kind of wanted to take this from Rich Dad, Poor Dad and Cash Flow Quadrant. He talked about the 7 levels of investing. There's other lists of investors, and we kind of took a blend of all of those and came up with our own list. And as you're listening, you're going to instantly put yourself in the category that you're in. And we want to talk about the categories, maybe the positives, negatives, and then how do you move yourself up that investor list to the ultimate level that we'll talk about.
Ultimate investor.
All right. Well, what's number 1 on your list? What's the bottom level of investing?
It's called the broke level. You have no money to invest.
You have no money.
You don't even have money in order to get yourself into debt.
I mean, there's lots of people that live paycheck to paycheck, right? I mean, I'll bet it's a high percentage of people in the U.S. live paycheck to paycheck and don't have extra money to invest. Don't you think?
That's right. And that's a starting level. And so if you're in that level, it's not necessarily a bad thing. It may be a result of circumstance.
Hey, we were all there at one time.
We were all there at one time. And so just recognizing, okay, I've got to start. Because a lot of times people never start to educate themselves on investing. They never start setting aside money. And so they stay at basically level 0, broke.
Mm-hmm.
And we want to encourage people to move slowly up the ladder.
And you don't have to have identified exactly where you want to go. You just need to say, hey, I want to start investing. I don't know where to go. Here's where I'm starting.
Just get started.
What's next? So people in level 1, they're probably not doing any sort of investing whatsoever. They're broke. How do you move up to the next level?
Well, yeah, most people that we're calling broke, and it sounds derogatory, and I don't want it to necessarily be that, is they're not spending any time thinking about investing, learning about investing. They are spending everything they make, and that may be because their income is so low that they're surviving. And so their first action should be to increase income. There's certain levels of income that you're never going to have money to save or invest. And so you don't really think about investing. You can still educate yourself, but you need to focus on increasing your income, whether that's going back to school, getting a better education, finding the next job that's going to give you more per hour or a higher salary.
So I'll challenge that. And I would say there's a lot of people that I think people would consider rich that are broke. You know what I mean? And I would say you have to make more money, but I think more importantly, you have to spend less money, and you have to decide, I'm spending less money because I am going to invest.
Yeah, you say there are people that have money that are broke. They're spending everything they make.
Right.
This level though doesn't have any money to invest.
Right.
And maybe they don't even have any extra money to spend. So the second level that I put down is the borrower. And so this person has a little bit of excess income, and they do something that I think is terrible, is they go out and use that income as a down payment on a car or a down payment on a house, and they get themselves into debt, and now they're a borrower. Mm-hmm. And in fact, they're not they don't have any money to invest, because what little money they spent on liabilities, and they borrowed the money. So now they're paying other people interest. Yeah. And so it's like a negative or reverse investing.
Yeah, you might even be lower than.
Yeah, most of their money isn't being saved. It's paying someone else a return for whatever liability that they purchased. I'm not saying that that's necessarily a bad thing, depending on where you are. But when you get a little bit of money, the first thing you should do is stay living below your means, not go out and borrow and get into a bunch of debt on a liability that's going to go down on value. You should be saving to buy assets.
Perfect example is the car, right? Because if you don't have great credit, you're going to have a super high interest rate. You may be paying 10, 20% on a car that's depreciating in value every single day. As soon as you buy it, it depreciates the most, and it gets worse.
Yeah. So that's so level 2, broke. You have no money to invest. Number 2 is borrower. You have a little bit of money. You get yourself into debt, buying things that you shouldn't. Number 3 is we call savers.
Okay.
So savers can be one of two people. They have a little bit of money, and instead of going out and buying things they don't need, they are saving it in the bank. They are risk averse. They are not educated on investments or investment strategy or financial vehicles, but they do have enough wherewithal to say, I'm gonna spend a little less than I make. Another type of saver would be, they've listened to Dave Ramsey. They went ahead and got themselves in a bunch of debt, but now they're going to get out of debt. So they start saving, paying down that debt to get themselves out of the hole to where they can start investing.
Yeah.
So that's level 3 savers.
I think there's a massive percentage of people that are probably in this category, right? Like they're smart enough to not go buy the 10%, car that they can't afford. That's depreciating. They're probably spending a little bit less than they earn, but they're not really going up much. You know what I mean? They're saving and then they blow it on Christmas or one vacation, and then we're right back to
their checking
level
accounts
2.
kind of up and down a little bit. They save a little bit and then they go spend it a little bit.
Yeah, and we do want to do a podcast on this, talking about budgeting, because like we've said, most people think they're saving and their account goes up, and then something happens, an unforeseen event.
Yeah.
That they need new tires, their car breaks down, they have a medical issue, and it wipes out their savings, and then they go back to doing the same thing again, and they save until that next unexpected event comes.
Which is always going to happen.
Unexpected.
Always.
Yeah.
And so they should be partitioning that and saving for those events.
Yeah.
They're not, and so they never get ahead. They like, I can't ever get ahead. 10 years goes by, I still don't have any money, and it's because they're not adequately saving. All right, number 4, fourth level is I'm going to call simple investors. And what I mean by this is these are people that probably have a good job. They are not massively in debt. They have extra funds. They still don't have any financial education, but their job may offer them a 401k.
Financial education is not given out. You know what I mean? If you go get a degree, you get a very specific education.
Yeah, for
in that
sure.
Field. High school doesn't require any personal financial literacy for most schools. So, I mean, if you don't think about it, you can accidentally go through your life. And a lot of people, again, don't start out with money. So it's not like you have to learn how to manage money because you have all this money. Oh my God, I have all this money. I have to, that's a problem that comes on later in life. And if you don't force yourself to sit down and learn what to do with the money, then you don't have any money. It disappears. You hear about the people who win the lottery and then, 5 years later, they've ruined their life. You've got to learn. And those simple steps, I think that was a really good example as well. The company 401k, right?
Most people start with that. They don't pick stocks. They have no knowledge of stocks, bonds, mutual funds. They don't know anything about it. But the simple investor will take steps to put money in a 401k. Maybe they take advantage of the matching. Of course, it offers some tax benefits. So they're doing the bare minimum.
Yeah.
Maybe they have a savings account at the bank and a CD or something. They're just a simple investor that doesn't have education, but is starting to take steps.
They probably love cash. This level probably has a decent amount of the portfolio in cash. You know what I mean? Saving cash.
Simple investor, maybe they pay off their house. That's a guaranteed interest return. If your house is at 5%, that's guaranteed 5% return if you pay off your house. So that would be this category.
I'm seeing myself in every category here. Actually, as I get older and older, I'm seeing
been
myself.
in each one.
I've been in each one, I think. Yeah.
Well, so it starts to get interesting around the next level. I've labeled this strategic investor.
Okay.
And what I mean by that is this is the level where someone maybe getting along in their career, they now have a solid salary, they have expendable income, and they're taking the time to educate themselves on investing. And when I say strategic, what I mean by that is these people have a plan. They've put together a plan to retire, let's say. They've worked with a financial planner. They say, okay, I want to have this much money when I retire. I've got to save 8% of my income each year. They've mapped it out. They've taken that kind of sophistication and time. Yeah. And so they are putting a safety net in place and checking that box and saying, okay, I'm going to retire at 65. And they may be in their 401k, but they may also have stocks and mutual funds outside of a 401k. They may educate themselves on which stocks are better, what sectors are better, things like that. And this is where the education starts to kick in. They may be reading books about investing, and maybe you were in this category when you were in your 40s or something.
I was about to ask you that. You said you could identify with a lot of these. Give us a little time frame example of you and the sophisticated investor level.
So, well, I could probably take you through. It absolutely is based on my age, and a lot of people, as you go through your professional career, you graduate from college, and you actually maybe have some financial debt, student loan debt, and so you don't have any money at that point. But then, as you progress along, then you get to the point where, okay, now you've got a professional job or a job that offers a 401k. All of a sudden, kids come along. Maybe you do a 529. And the older you get, the more money you're making. And then you go past the point where you've maxed out your 401k, right? Because most of them just match up to 4 or 6% or something like that.
Yep.
Well, now you get past that point and you're like, okay, I have extra money. I don't want to go out and blow it. So now I want to educate myself on how to invest that money.
I think this is when most of our investors start to approach us, to be honest, because your simple investing level is your company 401k. It's things you can feel and touch and easily understand. It's what I would consider house rentals, just buying 5-6 houses to carry into retirement for cash flow. It's a great little deal. But I find people really starting to listen and ask questions right around the time that they're looking for something else. They met with a life insurance guy who wants to give them 7%, no risk returns and all this crap that seems way too complicated. And there's something about real estate that I think a lot of people can identify with. Specifically because it kind of relates back to that simple one. It's like, okay, houses are good investments. Most people own a house. They've been through a real estate transaction, maybe several at that point. And I think this is where other investments, like, hey, let's invest in a company. Let's talk to my brother-in-law about that liquor store he always wanted to open, or let's look at this warehouse or something. I think this is a big step because this is when you really start to get diversified, right? I think up until this point, you've gone super narrow, like, hey, don't mess this up. Don't buy a stupid car that you can't afford. You're just trying really hard to not squander what you've gotten so hard. And this is the point where you need to start taking on some risk, I feel like.
Well, and you kind of are touching on level 6, which we're calling the sophisticated investor. And so after they've got their long-term safety plan, they've got their retirement plan, they're maxing out their 401k, they're educating themselves on stocks and bonds and mutual funds and other investments. Now they still have money left over, and they want a little bit of a higher risk, higher return. And that's what you're talking about. They start looking into assets. So sophisticated investor has all of those, the safety net done, the life insurance, all those boxes are checked, and they still have extra money and they want a higher return. They don't just want to fund more mutual funds.
Yeah.
And that's where our investors do come in, because they say, okay, how do I get involved in buying assets? How do I diversify outside of just the stock market? And how do I get some higher returns? And that's what we're calling the sophisticated investor. And that's a legal term as well when we're raising money. It's people that have an education in investing matters and they have disposable income to invest. And I would say most of our investors are in the sophisticated level where they can put $25,000, $50,000, $100,000 into an investment vehicle that should pay out 20, 25, 30% returns, which is way higher than the average, 401k.
Yeah, lets them diversify too with their previous investments.
That's right.
Yeah.
And I think those opportunities are out there all the time, especially right now in this economy. There's opportunity to be had everywhere. I've been telling our construction guy, if you can get employees and product, you should have an unlimited amount of work in almost every business, right? I mean, there's businesses closing because they don't have work. But anyway, I think this is the stage where wealth is created. I mean, there's little wealth creation in all the other ones. But like you said, the first 3 or 4 are safety nets. Not squandering what you've built, building up, following the path that you kind of should. And a 401k isn't necessarily going to make you rich, but it's probably a necessary path you can take. And it's not a horrible investment if you're getting matching and the tax deferred aspect of it.
And it's safety, right? It's free from creditors. I don't believe they can get to your 401k.
That's right.
And so it's a retirement safety net. And those are good things to check off before you start risking additional funds somewhere else. When people come and ask me, well, what's your minimum and what do you want to, can I invest with you? I take it seriously because even though our deals time and again have paid off, there's still a risk that one of them won't. And if someone brings me their $15,000 or their $25,000 and that's all they have, and they don't have a retirement safety net and they don't have some of these things, it's much harder for me to take that money because if the deal doesn't go well, they're going to be really hurt financially. And that's why the rules are in place to only allow so many accredited or so many sophisticated, because we want to make sure that people have those backup plans. Okay, so I think not everybody's going to go to level 7, but everybody should strive to get to level 6, sophisticated investor, where you have extra income. You are turning that income, earned income, into passive income, and you're earning high rates of return through investing in quality assets with education backing your decisions. That's level 6. Everyone should strive to get there. Some people will get there faster than others based on their income. But your whole life should be spent on becoming a better investor and earning more income. And going back to your statement, some people, they think that they can just be a hairdresser, an accountant, an engineer. In reality, all you're doing is that profession. You're trading your time for money.
Yeah.
And so you really should think about, I need to become an expert in how to get money because that's the goal.
You greedy bastard.
Yeah, I know it sounds terrible, but really, why do you spend all day at your workplace? There's some people that love their work, but most people don't. And the reason they're trading the one life they have, or at least a half of it at the office, is to get more money. So why not spend a bit of your day becoming an expert on both how to get more money and how to handle the money, how to invest the money wisely.
And maybe how to work less.
That's right. And if you can transition that earned income and turn it into passive income through good investments, then you can quit the day job and do whatever you want.
And then that's when we maybe hit to level 7, right? What is level 7? What's
level
this last
7,
level?
I call the professional investor. And so this is where you really have mastered managing money. And I'm not
earning money, I would say. You've mastered earning money, and this is where you are mastering managing it.
Well, yeah, I don't mean managing money as in like a portfolio, like a stock, 401k advisor, because they're taking a fee to manage the money, but they're not actually creating the investments. Professional investor goes out and creates investments where other people feel so confident in our ability, let's say, because we're professional investors, that they're willing to give us their money and invest in our deal that we created, that we offered.
That's a good point.
That's a professional investor, is that and our returns can be infinite, because I can put together an investment and I can make fees and returns on that investment and we do invest our money, but if I didn't invest any money in it, I would still get money out of it.
Right.
So it's an infinite return. I can make infinite amount of money and have no money invested. Only a professional investor can pull that kind of thing off.
Would you call a business owner a professional investor, do you think?
Yeah, in some cases, because
they might.
if it's a bigger business, not like a self-employed business where they're working a job, but a business is
their job. Yeah.
Basically, they're leveraging their employees and the employees' talents in order to generate free income. Right. And so it's basically an infinite amount of return on that as well. So it can be big business owners, could be a professional investor in some sense.
The more we talk about this, the more I'm just getting reminded how you have to be a professional at not only managing your own time, but managing other people's time, and really have this sense of appreciation for the time value of money and how much money time can give you. And I know we always talk about that we have a finite supply of time, and time is the greatest equalizer because we all have the same amount of it. But like you said, when you can start to appreciate leveraging other people's time and creating investment opportunities, that would give you an infinite scale. I mean, look at Amazon. It's just an extreme example. Like we've all seen the crappy picture of Bezos in the 90s dorm room, and look at the behemoth that it is. And everyone is trading in their time for money, right? And it's the biggest, I'm going to let you know, the biggest secret ever, right? If you pay people enough money, they will stay working for you, right?
Yeah.
And there's just a simple binary decision. Do they make me more money than I pay them? And 90% of the time, they know they make you more money than you pay them. They know it, but there's just nothing they can do about it.
Well, yeah, I mean, obviously they're in a position where they need the paycheck more than they need than they need the time, or they have opportunity to go to. So, but yeah, that's a great example. Is at this level, like we're mainly leveraging people's money.
Right.
We're leveraging their money to make money, and of course we're investing our own, but we don't need to invest our own. We can raise all the money to do an investment, and I'll take a piece of that asset. But business owners do it with you like that?
I did.
People that are leveraging employees, right? It's infinite. It would on both scales. It's infinite. If we were real ambitious and we knew, private equity sources, we could go raise $10 million a deal or $100 million a deal. There's no limit to the amount of money we could leverage. Same with Bezos and Walmart. There's an infinite amount of people that they can leverage to grow it to unlimited size, and that's how he's worth $200 billion. Is he's got a system and he has great people that continue to build that company, regardless if he shows up or not now. Right. And I don't think everybody has to have a plan to be a professional investor. But sophisticated, they should. Everyone should always be trying to have enough passive income where they don't have to work. That should be a goal for everybody.
My personal idea of retirement is to where I'm so busy managing my money and my investments that I don't have time to do a job. That's all the effort I can expend that day is just, where's my money? What's my money doing? Do I need to fill out this form for this new investment? Am I receiving it back? Do I need to file my taxes? Is there some legal dispute? Is there an operating agreement? I mean, that's pretty much what Brian does now. Well, no, it seems like
you can have to have a lot of money to spend your all day just worrying about your money. And
it's a short day.
Well, if you got enough money, you could have people do that for you, and they would grow, and they'll grow your nest egg for you.
And that is a family office, right? If your family creates enough wealth, you create an office to manage your wealth.
Yep.
Family office.
Yeah, and I don't know if people know about family offices or what that term even means, but under ultra high net worth individuals, they have so much family money, probably north of $50 million. Yeah. And they can go into the hundreds of millions, where they have a full-time office with high professional, high experience, high educated people that all they do is just grow the net worth of the family. That's called a family office.
Right.
And so maybe we'll get there one day. I don't know.
Well, I think this is good, right? I mean, these aren't meant to label. These are meant to help and empower and just give you a roundabout idea of, hey, this is kind of what you should be focused on the next step. If you could identify yourself somewhere in a step, you know what you just conquered, you know what you have to look forward to. But I think half of it is just not making stupid mistakes, not paying stupid taxes, you know what I mean, for just not paying attention. Don't fumble the ball at the last minute. I mean, you just really need to focus on not losing your money and earning a decent rate of return until you understand enough and get presented with the right opportunity, and that's maybe level 5 or 6 where you could find an opportunity with us.
All we're trying to do is give people, let them know where they might fall on the scale and give them a roadmap to what should I be doing next?
Yeah.
Like I said, it's not to label anybody, but if you're broke, you need to earn more income. It has to be the first step. If you don't have any money, let's say you make $15 an hour or whatever, that's in today's society, that's just enough to cover the bills, the utilities, the rent, the cell phone bill, the TV. And so if that's all you can do, you don't really have a choice. You've got to figure out a way to increase that income by any means possible. If you're in the borrower category, you need to pay off. I mean, you need to be increasing your income. Most of these steps, you need to focus on increasing income, but you need to be paying off that debt. Especially bad debt, because every dollar you're spending in interest paying off a loan, car loan, credit card, whatever, it should be going to saving or to investing.
Yeah. And that could be investing back into your own business, right?
Yeah.
If you have, how many investors do we have that say, oh, maybe I'm out on this one, I had to buy this new piece of machinery. Oh, I'm out on this one, I had to build a new lake house maybe for some. But there's different forms of investing. It's not just giving your money to somebody else. That could be investing back into your own business, investing back into yourself,
or investing in education.
Right? All of those are going to bring you to the next level.
Well, I think that's it.
Well, that was the 7 levels of investing. If you got anything out of this, make sure to like and subscribe so you can get a notification the next time we post, which is next week. Make sure to like and subscribe, and we will catch you next week on how to invest in commercial real estate. Thanks, guys.
Bye.